Well, we've really had some good excitement here in the market that probably started as early as last week. Corn and beans and even wheat have put on some nice price appreciation. We made some sales here in the office. We spent some time talking over the last few weeks about our sales targets. We wanted to make sure we followed through with those. We're just going to discuss that a little bit here as we go through the webinar. Keep in mind, everything we're discussing is for education and example purposes. Make sure you guys understand and know your own risk tolerance as we go through this information. But just going back to the basic fundamentals of having a marketing plan, okay, that's to our benefit. We're making business decisions as producers of corn, soybeans, and wheat. We had planned sell areas and targets. And what we want to do is when price gets into those areas, we want to make sure that we reward and follow through with our plan. Now, you can argue about bushel adjustments based on the context of the information at the time. But nonetheless, we feel that it's very important that you at least respect your plan. And when price comes into your areas, you make some sell decisions and move some bushels. So that's kind of what happened here. Quickly, we'll go to the December corn chart. Okay, we kind of stalled out around that 4.25 area. We decided to make a sale right there. We've been up about 8-10 cents off the lows. It's been a pretty good rally, and you can see there's a lot of price congestion there. We've been talking about the 432.75 gap for quite a while as our next upside target. We did finally fill that, and you can see as well that you had prior support now come resistance at 435. So a really tight window in there that suggests another good opportunity to sell some old crop corn, which again we followed through with. Now the big question remains, are we going to have enough momentum to push higher into 450, or are we going to swing back down into the 410 area? If we go to 450, we find that that's great. It's going to be another target for us. We can live with our decision of selling some here on the way up. If we go down to 410 and had done nothing, we would have had regrets not making sales at these targets we had selected before. So that's our plan here on corn. Going over to the soybean market, this is your daily bean chart. Same thing again, when we were sitting around that 1050 area, we just basically left it up to producers to make a decision. Again, going back to my previous point, a small sale here we felt didn't hurt you. You could really flip a coin either direction in 50 cents higher or lower. However, we did believe that if we went to the upper end of the range, we did need to reward that with a rally. We got to move up to that 1080 area here on Jan. We followed through with a sale. Now, with some of this momentum ahead of the China deal, markets followed through a little bit higher and pushed into the $11 zone. And again, if you look a little bit to the left, you can see that there's some price resistance there as well. We followed through with another sale. We want to make sure that we keep these markets in front of us and reward these rallies. And now I think that what we want to do just quickly is just pose a question to you is when you're making and looking at these marketing plans, are you wearing your farmer hat or are you wearing your trader hat? I think as we look at it from a farmer standpoint, you guys have to remember you're always long. You have the crop that you're harvesting, you have next year's crop, you have the crop after that. We've all heard that many times before. So it's our job to help protect profit and make good business decisions as a producer and of corn, soybeans, and wheat. You are in the business of making business decisions. Now, if I'm wearing my trader hat, we have a little bit more flexibility. We have the opportunity to be long or short. We're looking at tight risk reward scenarios. We have quick entries and exits, and we can also select what markets we want to be a part of. We can, if we miss out on a rally in beans, all we have to do is move our screen, our mouse cursor down a couple spots, and we could look at the gold market. We could look at the S&P mini market. There's a lot of other places to go for traders. But when you're a farmer producer, you're focused on the corn, soybean, and wheat market and making business decisions in that context. But let's put on our trader hat for a quick second and look at this daily January bean chart here again. Okay, what I see is somebody that would want to get long the market. We've had strong bullish momentum and we finally broke out of the range. As a trader, I find it very hard to open up new longs at this point. The risk and reward just doesn't make a lot of sense. What I would want to do is wait for a potential pullback into that 1060 gap area fill, and then some indication that some other longs are stepping in that would meet my criteria to go long. That's from a trader's perspective. Now, from a farmer that's growing soybeans, if you choose to do nothing on this rally, can you afford to have the market pull back to 1060 and make a decision down there? For us in our office, we feel that that's not where we want to place our producers and ourselves. We would rather sell some on the way up. Now, that being said, as we continue on here with that Jan chart, if you are a farmer that decided to make some sales here on the way up and we do get a pullback, you are likely in a better position to make a decision to become a trader in that moment and re-own some beans if you like to, and it meets your risk objectives and your criteria for getting long. We're not saying that that's something you have to do. It's just a potential area to watch. And we feel that for those of you that would like to be continue to be bullish, you're in a better position that by rewarding the market on the way up, when it comes back in, you can make decisions on whether or not you want to make re-ownership for your crop. As we look to wrap this thing up again, it's always just important to have a plan. Okay, our job in our office is to make sure that we help follow through with that and put out recommendations that do so. We always want to ask ourselves, are we a farmer or are we a trader? There's two very distinct differences, risk objectives and expected outcomes, I guess, if you will, on that front. At the end of the day, too, I think what's important is when we get into these rally situations and our price targets, when you're making bushel decisions, you just have to decide how many bushels do you want to keep for the potential for higher prices. Maybe you feel that 70% is appropriate to hold and risk out on higher prices, but just keep in mind that at the same time that you're risking for the upside, you're keeping that risk open to the downside as well. Maybe you feel that 20% is perfect or a good enough number for you. That's going to be based on the individual, but we think that that's just a good way to keep in the back of your mind that when the prices are appreciating and you're looking to make a sales decision, how many bushels do you want to bet on prices going even higher than they are today? As always, we hope you enjoyed the content. Like the video, subscribe to the channel. We always enjoy making these for you, and God bless.